Welcome everyone to the Charts of the Day video for September 16th, 2019. With the Saudi attack over the weekend, which caused a surge in crude oil prices, and that carried over today into energy stocks, oil and gas stocks, I thought it would be a good time to revisit some of these charts. So I'm going to run through some of the larger cap names, and we'll take a look at how some of those are positioned. Starting with ExxonMobil, XOM. This is probably one of the better positioned charts for something more sustainably bullish, in my opinion. The reason for that is the decline that we have off of the April high here looks like a nice clean A, B, and C corrective pullback with some nice positive divergence on the recent August low for wave C compared to the lows that were hit on the A wave. Bigger picture here, this does look like overall a large triangle that has been forming since the 2008 high here. So within that triangle, this would be an A, B, C, and now working on the D wave, which can take us back up to around, I would say, 90 to 95, ideally before completing, and turning back down to fill out the E wave and complete the overall fourth wave triangle. So if this is an A, B start to wave D, and price is now going to fill out the C wave of that D, then it should do so within a 5-wave structure, which would mean the initial move here is still just wave 1 of C. If price fills out another micro 4th and 5th wave, that can give us 5 waves up off of our August low for wave 1 of C, which should suggest a standard impulse for that C wave overall. The alternative being that maybe the C wave takes shape as an ending diagonal if we don't get a clear 5 up for the wave 1 and it looks more like 3 waves. But in either case, I will be watching this chart for a potential long entry on the corrective wave 2 pullback, and again, ideally after a micro 4th and 5th wave to complete the wave 1 first, then consolidate correctively in a wave 2. We'll look at the standard 382 to 618 retrace of the wave 1 as the target support for wave 2, and that could also set up a nice inverted head and shoulders pattern for the possible breakout in the wave 3 of C. So again, one of the better position charts, I think, to take advantage of some possible continued upside, assuming that price continues to cooperate with this setup. Next up, let's take a look at CVX. Also, not terribly positioned, in my opinion, to continue to the upside here. Zooming out a little bit. I think this overall rally that has been ongoing since the 2015 low is best counted as diagonal structure. Initial 3-wave start for the wave 1. The third also breaking down best into a 3-wave structure, and that would suggest a ABC 3-wave structure for the 5th wave as well. So under that assumption and a bottom for the 4th wave at the December low, this can be a possible A, B, now starting wave C of 5 to the upside. So somewhat similar to the potential that we were looking at on XOM for 5-wave C wave to take us higher here. And similar setup, this would still be working on the initial wave 1 of C. So once we get a good solid looking 1-2 start to that C wave in place, we can attempt an entry on the corrective wave 2 pullback using a stop underneath the August low there. Next up is Royal Dutch, RDS. Not quite as clear here as far as a clean setup for near-term upside. Actually still lean a little bit more towards the blue counts, but we'll see how this bounce develops and if it starts to cross beyond what would normally be seen for a 4th wave. So under the blue count, with a B wave top already in place at this June high, this should be a 1, 2, 3, bouncing in the 4th, and still at the very least see a 5th wave of RC. Which at this point would likely only reach the upper end of that target region shown by the blue box. The alternative, if we don't turn back down on a 5th wave and start to bounce more than what would be expected for a 4th, is a somewhat similar C wave to the upside, in this case for a wider flat for this B. But I do think that the XOM and CVX charts are a little bit cleaner to trade for that potential in comparison to this RDS chart. Next up on BP, this chart I don't view quite nearly as well positioned for a nice bullish outcome, although I wouldn't necessarily put it past the chart if we do see that sustained upside on XOM and CVX and other things as well. But here, there's a similar triangle going on as well. In this case, it looks a little bit more like a B wave triangle rather than a fourth wave triangle, so a B wave within a larger fourth. But in this case, the D wave would likely still need some further downside. So maybe that happens in an ending diagonal for wave C of D. This is an ABC start for the wave 1 that would allow for higher in the wave 2. Let's see what we have. We have a 618 retrace at 41.43 and then a 764 at 42.90. So easily possible that this bounce continues to take us a little bit higher towards those fib resistance levels before turning back down, but not nearly as excited about attempting a long trade on this one. Moving on to PBR, another interesting chart. This one actually very reasonably positioned for something bullish as well. In this case, it's a much different looking chart, mainly because this is a Brazilian name and traded on the Bovespa, a part of the Bovespa index. But overall, we can get a possible 1-2, 1-2, 1-2 of a larger impulse to the upside in this case. So a situation where if this continues to follow this potential setup, really has a decent amount of upside to potentially take advantage of if price continues to cooperate. So another situation where we can trade against the August low as a possible wave 2 bottom in this place. In this case, looking for an initial 5 up here is the wave 1 of 3 and pulling back in a wave 2 of 3. So once we see that same initial 1-2 start off of the August low, we can attempt an entry on the wave 2, setting a stop underneath that August low and see where that takes us. And again, potentially filling out a third wave to the upside, which can easily take us into the lower 30 region if we do get that follow through, which is a decent size percentage move here. And finally, not one of the larger cap names, but I did want to end the webinar here with APA, since it was one of the stocks that we discussed last week during these our charts of the day video, and was one of the suggested long setups here for a trip back to at least 29 in a fourth wave. And after today's move, that obviously was already satisfied, but seems like it still could easily stretch a little bit higher and maybe even reach that next fib at 32.10. But that is under the bearish potential there in red, where this bounces a fourth wave of C that'll still turn back down in a fifth. However, it's equally as possible under the blue count here that places the B wave at a different spot and the 1, 2, 3, 4, and 5 already completes, that this entire cycle degree fourth wave has put in a very long-term bottom. And that would become much more likely if we can fill out a full 5 waves off of the August low here. So certainly will be watching that one. I do think, again, 32 is achievable at this point, even though we hit our minimum expected target of 29. Let's see if it continues to press higher, and if it does so in what looks like a 5-wave structure of the upside to support that more lasting longer-term bottom in place as the cycle degree fourth wave in blue. All right, that's what I had for you guys today. See you again next time.